All right, you guys, I just want to go over kind of real quickly what happened in the market today and um, to give you some indicator of what might come later in the week. So you go over here to the SPY and you can see we hit the critical target and you wicked over that and you came into this 50 EMA, right, which is significant. As far as levels that people watch. So this 378 is a critical level. That's why it's labeled critical target. Now a lot of people at this point, if you go over to Bitcoin world, what you're going to see is all these people are going to start to talk about a Bitcoin pump, the bottom's in, the normal kind of stuff, or they're going to be saying, is the bottom in? And it's like wildly naive. And so you came into the 50 EMA on the SPY, but I want to show you something. How do I string all this together? How do I figure this stuff out? So now we go over here to the VIX, and the VIX indicates the essentially how many calls and puts are being purchased. It's the volatility index, right? And so I've talked about it a bunch. When the VIX is above this green line, that means there's a lot of panic and fear in the market. And that's, and we're at these critical levels. I'm not going to go far back in the chart, but we've been this whole year. Why I'm not trading options is because the premium on options is so high because the house is on fire, and people who are trading know the house is on fire, and so they just keep pouring money into the insurance, and they keep actually getting burned, but that's a story for a different day. But what I want you to take note of is that with the SPY, and this is something to always remember because it's very unusual that this happens. We had an up day on the SPY, and then you go over here to the VIX and you have an up day on the VIX. Okay? So just follow along. Think about what I'm saying. This indicates calls and puts being purchased, primarily puts at this point, right? This shows that people are buying insurance policies more and more and more, right? The VIX should be somewhere down here. When the market's chill, maybe it's down here, but we are at breakout levels for a prolonged period of time. So we're setting up new levels on the VIX. But here's something to put in the back of your mind as you trade and learn how to trade. When you see the VIX up, okay, volatility index up, the SPY, they should move opposite each other. The SPY should be selling off, okay, because the VIX is up, SPY should be coming down. That is not happening shows me something, right? So later in the week, the thing to watch is, watch this. TLT broke another low, okay, came in at 91.82. If we look at the chart on this, look at that. Look at what's happening with bonds. And like I said, bonds are the substratum. They're the foundation on which all of the bricks, which are the individual stocks and indexes on the market, on the traditional market, all of those are like the bricks, and the bonds are like the pebbles under the bricks that keeps everything in place and operating in an organized way. But when the pebbles shift, the rocks on top are going to shift, and nobody notices the pebbles. You see the analogy? Nobody notices it because it's kind of always in the background, but it's really important. And so what I'm showing you is the bonds. These bonds should be moving along with, if we were going to have a breakout, okay, if you're going to have a breakout, then what you would be seeing is the bonds cooperating with this move. Right now, what you have is the bonds are selling off, okay, TLT is coming down. TLT should be moving up with the market, not in a great fashion, but it should be at least cooperating, right? It should be moving generally in that direction. It shouldn't be hitting lower lows. Going back to 2004, I think it is, something like that. So you would see this rally. This tells me that this rally here is basically going to end up being a trap. And what I would expect to see is that you might get this kind of a move this week. And then you're going to get one of these nasty ones up to here. And then you're just going to get this sell. You're probably going to get a steep sell off on Friday, Thursday, Friday. And that could be it could just be natural market fluctuation, but you could have an earnings report come in nasty, and then that would be enough to create that move. So things to remember, especially trading this recession and learning these signals, when people start to get real, like these degenerates over here in the crypto world, they're going to start to get hyped and say, okay, well, the SPY is potentially breaking out and la la la, it's, Bitcoin's going to pump. Well, that's not, I would agree if the indicators were there, but they are not there. And the biggest one, for the short term is this VIX. The VIX should not be moving like that. It should be moving in the opposite direction on the daily, okay? So what you need to see, even though it closed red, this should not have come back up here. This should be coming down here if you were going to come into a rally, right? The VIX should have hit this level here and then sold off and come back down. That would be an indicator of an actual potential, not a huge rally, but a further move to the upside. But you're not going to see that with the VIX doing what it does. And you're not going to see that with TLT doing what it is doing, which is a much longer video. And I've done those videos. I hope you've watched them, because what's happening here is the the sovereign bond market is collapsing. That's what's happening. So what that means is for Bitcoin is that essentially we're stuck. So I want to show you, what I've been observing and trying to figure this out a little bit, because Bitcoin has been in this long period and at this level here. Okay, we had some volatility these days, like this wick here. These are CPI days. This isn't, but this is a CPI day. I remember this isn't too long ago. Last 2 weeks, last CPI, we had this big move up and down. This is probably a CPI as well, right? So I bet if you go back and check the days, this is probably, I think this is a CPI and this is a CPI. But other than that, what you have is this very tight, long consolidation. And this trend line here, which I never point out or use, but if it's on here, it means that it is important. So if we go back and I look at where that's from and why I took and drew that trend line, it's going to be a macro line. That's why it's dotted like that. And so what that is if we go to, I got to flip here to the 4 hour, let's do a daily. So if I go to the daily and then we trace that line, what this is, they call it a pitchfork. And so what you would have is a top of the channel, and then you'd have this top of the channel, right? These two touches here, I'm doing it roughly just to give you an idea of what I'm talking about. And this would be the bottom of the channel there. And so what that line is the middle of the channel, that dotted line. And you can see we're consolidating and we're coming into that dotted line, which I've had up there for probably several months now. And so, not saying anything's going to necessarily happen, but I also want you to take note of this, is that Bitcoin has consolidated in this very tight range with almost no volatility that's organic. All of this volatility is based on stock market volatility, and Bitcoin has been less volatile than the stock market. Historically, it's always more volatile, but only 4 times in history have you had Bitcoin be less volatile than the stock market. And so, two theories I have. One, this is a huge accumulation zone for exchanges, and along with that, there, when this plays out, when this move plays out, which I believe is going to be the downside, and I'll be watching this carefully because it's just an idea. I think this could be a chance to see this kind of a dump right through to this 14,000. And so originally I was going to close my shorts at this 17,000, but I think that I might hold a little bit while longer and see if we get a sell-off with volume, just based on coming into this trend line. And also, one other thing to look at is that you have the SPY with all this volatility, and the SPY kind of coming up into this new level, right? This target here, which should have caused something, some kind of a move on Bitcoin, but it did not. And so with all this volatility, you're not seeing any move to the upside. The market has moved to the upside, but Bitcoin is not playing along. And so what that tells me is the institutions or some exchanges might be accumulating Bitcoin here, and then they may just dump it. That may be something that's happening. The other thought I had, which is just an idea, and it's not something to trade off of, is that exchanges need to make money. Okay, and so the way they make money is on trading fees. And when we have this long consolidation here, the Coinbases of the world, their numbers are down. You know, they've had a sustained period now with, you know, looking at a weekly, you've got 1, 2, 3, 4, 5, 6, going on 6 weeks stuck in this weird little range. They're not making any money. And so at some point, they have to create some volatility, and a way to do that, because they make money on the trading. They don't care if it goes up or down necessarily, right? So at some point here, they're going to want to dump this shit because they need to get people back on the hook to want to trade Bitcoin, and no one wants to trade Bitcoin right now, which is just an idea. You know, I could be totally wrong about that. The dollar, and just check this out, right? So why this rally is this move on the SPY, look at this, right? So if you're looking to figure out, are we going to see more upside? Like, why is this happening? Should I be buying here? That kind of question. A lot of people will get sucked in, but then look over here. Okay, so you see a pullback in the dollar, the DXY. Okay, but it's not significant. You know, the dollar, if you look back to August, it's at 105. We're hanging out now at 111. So this would be, what you're forming is a support, right? That's what's happening here, is you're forming a new range of support. So the dollar doing this, okay, maybe that gives some power to this rally, but this is not enough of a pullback on the dollar to cause the move on the SPY, right? It's just the way it is. Then you go over here. So I want to show you, look at this volatility on the Japanese yen. This is insane. This is insane. This is a country's currency. It looks like an altcoin. So we had here, this is government intervention because their currency was collapsing, and this is government intervention because the currency is collapsing. And what they're doing is they are selling, my theory is the Japanese are selling the Treasury, the U.S. Treasury bonds to buy their own currency, and therefore you see this sell-off in TLT. So when we go over to the yen here, and you see this volatility, that's ridiculous. Would not want to be in Japan right now. But along with that, what you're seeing is these new levels on these currencies being set up, and this is scary shit because they're buying their own currency and they can't get it back to where it should be. It's not holding up, right? You could see another dump. Here's another one for you. So this is all reasons why on the macro, this is basically just a giant short squeeze on the S&P. And so you look at this here. This is where they had the intervention first time. You had the rally back up. You sold that rally off. Then you had the scuttlebutt with is, are they going to pivot on their tax ideas? They did in fact pivot. It brought it back up here. Liz Truss resigned. Now they're sorting out things, right? And if things do not go well, and they are not going well over there in the UK, all you need is a break like this, and that currency goes right back into the shitter. So that's exactly what's happening. You didn't even hit, you did not come back up and even come, you did not retest. You should be seeing a retest here if this was really going to be a like a bullish kind of move, and you're not seeing that. So those are things to pay attention to, and that's why. But this one in particular should really stand out, so I just want to go back to it because it's the most important point for right now, and then I'll be done. Is anytime, this is so rare to see this happen, and it's happened a few times this month, which is even more rare, every day's history right now, but you should not be seeing the VIX. If you see the VIX moving up while the market is rallying, do not buy into that rally. Do not go long into that rally. Volatility is increasing. People are buying insurance, which means that this could absolutely just, this SPY, the market is saying, it's pretty much going to shit the bed. And so that's probably going to happen later in this week. And so, you know, I'm going to hang on to my UNG play because this is going to end up being savage. Wish I had got it down here. The Ukraine-Russia conflict completely is spiraling out of control. Don't want to talk about it, but it's not good. And we are due for a very cold winter in the US. And so even under normal conditions at these levels, based just on seasonality, you would see UNG continue the upside. But based on what's happening globally, that's why I think this could break over that 33. And it's just like Bitcoin, guys. When one of these ETFs like this has a big rip, it can really take off, you know, and you might end up sitting there at seeing 51. You know, this play here could be 100%er. Not guaranteed, but if something pops off in the world, something crazy happens, a pipeline breaks, natural gas, war in Ukraine, whatever, you're hedging these ideas that people, you know, are afraid right now. Well, how do you protect yourself? You put a little money into something like this, and if that shit does pop off, you're fine. If it doesn't pop off, that's good too, because the regular trades that you're in, you know, you can trade as normal, but this is a decent hedge at this time. So anyway, hope it helps.